Good afternoon, everybody. Welcome to the Moving Markets Podcast. It is Monday, the 5th of May, 2025. U.S. stock market has been closed for several hours. I think you all know this. It is my intention that on Mondays when I do this recorded podcast, because remember, we're going live on the rest of the week now, but on Mondays when I do this recorded podcast, it is my intention to usually do it right around the time the market is closing. But I was at a funeral today. A very good friend of mine fell out of contact with him a little bit, fell out of touch with him a little bit over these past few years, although we continued to trade text messages at birthday and Christmas. So I just hadn't talked to him for several years. Did not know he was going through some health struggles. This is a person that I've been good friends with since my freshman or sophomore year in high school. And he passed away a week ago due to some kidney and heart complications. I did not know he was dealing with those things because, like I said, we have fallen a little bit out of touch these last couple of years. But went to his funeral today and literally just got home about a half an hour ago to get the Signal newsletter put together and to do this podcast. So that's just by way of explanation. I'm not apologizing because I was at a friend's funeral. You don't apologize for that, but just by way of explanation why we're getting this rolling a little bit later today than what I would normally like to on a Monday. So, okay. So with that out of the way, and by the way, I know he's in a better place listening. R.I.P. Todd. Love you like a brother. Always have, always will. And I know the day will come we'll see each other again. All right. Anyway, here's where the market's finished today. I was watching this kind of out of the corner of my eye for a good portion of the afternoon after the funeral was over. I was watching, checking my phone every now and then. I know the Dow went positive for a little while and really looked like it had a chance to finish in the positive. And then it slid off, I think, pretty sharply in that last, it looks like maybe hour and a half of trading. That's kind of what I'm getting from this visual. Like I said, I wasn't watching every tick of this, but it's been a good portion of the day up here, moderately in positive territory. I don't think the Dow ever got real super positive today, but moderately in positive territory before sliding at the end of the day. Still, when you look at the charts of you look at the chart of the Dow, you look at the chart of the S&P, you look at the chart of the NASDAQ, this has been a very solid run. This is, I believe, let's count them. 1, 2, 3, 4, 5, 6, 7, 8. I want to say 9 days in a row of upward movement. And I think I saw a headline that the S&P actually had 10 days in a row of upward movement before today's little sell-off. And this is not a big sell-off. This is not, I mean, it's 0.2%. I don't know if you can see that there, but that's not bad. To me, that's really not that big a deal. You got to take a breather every now and then when you're on this strong a bullish run. You can go back to some incredibly strong, sustained bullish runs, and there's an occasional day where you give a little back. I think that's all today was. I think if we read anything more into today than a little bit of give back after an incredibly bullish run, then we're overthinking it. And we sometimes have the tendency to overthink it. Now, the rest of this week, you've got some stuff going on. You've got international trades. This is normally not a report that I would put a lot of weight in, but this is going to be a little more in focus because this gives us an idea of what those trade deficits are and that the whole idea of tariffs and trying to level the playing field with tariffs, that's centered around trade deficits and how other countries try and take advantage of us, but we're not supposed to do anything to try and level the playing field. At least that's one side's narrative. So this could be a little bit bigger deal than it might be otherwise. And then on Wednesday, of course, we have the FOMC announcement. I don't think anyone is really truly expecting the Fed to do an interest rate cut or an interest rate increase, but you got to watch closely to what Jerome Powell says. Powell, as much as any other Fed chair that I have known, not known personally because I've never known any of them personally, but the Fed chairs that have been in during the time of my life that I have paid attention or known about it at all, I don't know that any of them have had the ability and the knack for saying the absolute worst thing at the absolute worst time than Jerome Powell. He seems to, and it's not every time he speaks, but he seems to have kind of this knack for putting something out there that is, you wring your hands, you pull your hair out, you scratch your head, you say, why would he say that? Why would he? And then sometimes the answer is obvious. He's very political. He pretends not to be, which in my opinion just makes him also very intellectually dishonest, because he pretends not to be political, but he is very political. He hates Donald Trump. And I do believe I personally believe he is motivated somewhat by doing what will be less favorable to Donald Trump. I don't think he's anti-American. I don't think he hates the country. I'm not going to, I just think he hates Donald Trump. And I think he does things that show it. So I think the expectation, I didn't mean to turn that political, but what I'm saying is I don't think Powell will give us a rate cut. That would be a shock to the market and could potentially, whatever the market is doing up or down on Wednesday, it could absolutely accelerate the move to the upside or flip a downward movement to an upward movement if he did give us a rate cut. It would be a surprise. It would be an equal surprise if he said anything at all, and I would be shocked by this, anything at all that would be optimistic about the economy. Now, I don't think he's necessarily going to drag like troll us or say nothing but negative, but I think he's going to imply that everything the administration is doing creates uncertainty, and it makes it to where it increases the chances of recession. It increases the chances of inflation going up. It increases the possibility of economic downturns and market downturns. Those are the kind of things that I pretty much expect him to say, and it's going to be interesting to see how the market reacts to it. He's not going to be the ambiguous Fed chair that we wish we had. I don't know that we have had a truly ambiguous Fed chair since Bernanke, and even Bernanke, I think, was not as good as Alan Greenspan in terms of he could say a lot and say absolutely nothing. He could talk a lot and say nothing. So it's going to be interesting to see what Powell says, but I think he is going to cast a negative pall over what's going on and try and he's going to insinuate that everything that he is purely speculating on and purely guessing on, he's going to pitch it like the worst case scenario is on its way and the worst case scenario is happening. So watch out for that and be prepared for that. I think unless I'm wrong and he tempers his comments, and I genuinely hope I am, unless I'm wrong and he tempers his comments, or he somehow shocks us with a rate cut, I expect no matter what happens tomorrow, I expect Wednesday's market to finish negative and maybe carry through a slightly negative week. I do not think you're going to see a week like one of these weeks back here, even like a week back here or back here. I think you might see a week like this one. Well, even that one's not a real good representation. Maybe something like this back here, where we're down on the week, but not dramatically, not anything that's going to rattle people, not anything that's going to scare us or make us feel like the sky is falling, the earth is coming to an end. And that's just kind of what my expectation is for Powell's comments. All right. Now, with that said, let's talk about the new trade that I just sent out to you. We had success with the trade we did last week on Microsoft, and for a very similar reason to why I did that Microsoft trade, I'm doing almost the same thing with Advanced Micro Devices. As tempting as it is to do a long iron condor, I did not like the prices without creating too large a spread. I think AMD, even though they've benefited from a little bit of a bullish run just recently, I think they've been way too beat up for way too long, and I think now is a good time to get into something longer term. I could still do what I did with Microsoft, where if a day or two after we open this trade, we're sitting there looking at a 7, 8, 9, 10% profit, we may just grab it and get out. But I am leaning towards this being a long-term trade, thus the November 21 105 strike long calls with a short call that expires in June that would be so easy to roll up and out. And then with this short-term protection, earnings is tomorrow after the market closes. The one thing I did different than with Microsoft is instead of just adding long puts, I added a bear put spread as protection. Now, before I switch screens, because I want to tell you why I did the bear put. Before I do that, though, notice that our limit debit order of $15 is equal to where we could, in theory, get called away on the stock. Like if if AMD just took off like crazy, like let's say they had a good earnings report on Tuesday after the market closes, and on Wednesday morning, they're doing something crazy like going right up over $120 a share. I do not think that will happen, but anything could happen. Let's say hypothetically that's what they're doing. And then along with that, somehow we're one of those, you're one of those 1 in a million people that gets called away early on a short call. The odds of it are very slim, but it can happen. In the worst case scenario, you'd have a break even, and that's if you don't get any money at all back out of your put position. If they're taking off to the upside, we will either roll our short puts up and turn that short-term bear put spread into a bull put spread, or we'll just close the puts quickly, sell to close the entire put spread, get back whatever we can. And then if you got called out at 120, you'd be guaranteed a little bit of profit. It would be equal to whatever you got called away, whatever you sold your put spread for. So it's the one element that's different than the Microsoft trade is the addition of those short puts, and honestly it gives us just a tiny bit more flexibility in the trade. But the other difference on this one is we're not paying as much money for the spread overall, and the difference between the strike price of our long options is equal to what we're paying for the spread. So if it was to take off to the upside and we, like I said, freakishly we got called away at 120, we wouldn't lose any money. And so that's a little bit better than what you could have said for Microsoft. Incredibly easy trade to adjust. Like I said, we could do something like we did with Microsoft and jump out of the trade very quickly if it goes strong bullish and we see ourselves sitting with a 8 to 10% profit, the day after we open the trade, because we'll open it tomorrow morning, obviously. But my intention going in is that we're going to be long-term in this trade and adjust it a couple of times, as I hope, sincerely, AMD, before this year is over, goes a long ways towards, getting back to where it was, just 6 months ago, up in this 145, 150 range and beyond. And I think it's very possible it could do that. If they miss on earnings, they will go down, but I don't think they'll go down much below 90, which is why I added that 90 strike short put. They could come down and test 85. They could even come down and test 80. But I think if they slip, it's not going to be as bad as to test these lows. I think it will be more like a slip down to this 90 strike area. And that's why I put the 90 strike short put, so that we weren't paying as much for the put protection. And like I said, it's also a little easier to adjust if they take off to the upside. So that is the new trade for the week. No adjustments on our open trades. However, I know that both Johnson & Johnson and UPS, I know that both of them moved contrary to what we would have preferred today. But I still have hope. I'm sorry, UPS is one of the triple play trades. Johnson & Johnson, I mean, this is just, this is like, if this were a human being and this were their heart monitor, they're on light, they're dead, they're flatlining, they're absolutely 100% dead. I know stocks don't work quite that same way. I still think Johnson & Johnson, with the numbers they reported, I still think they're going to move up. I just, every day that they don't have a strong move up, I think, will they do it soon enough? So hang in there. I know it didn't move the way we wanted it to move today. I still have some hope, maybe a little bit of faith in this trade. I'm not going to make an adjustment for tomorrow, but if we have another down day tomorrow, or just a day that doesn't move enough bullish to maybe cut this loss in half, I'll make another adjustment to the trade, or we'll get out. We gained a little bit in NVIDIA today. We gained a little bit in Palantir today. So on the year to date, we are still looking absolutely phenomenal. There will be some collar trades getting adjusted this week. I'm not going to spend time right now to go into that. I do want to give you one quick reminder, I am not going to be live. I'm going to be live tomorrow morning. Okay. Tomorrow morning, 30 minutes after the market opens, we will do this podcast live. We'll talk about whether or not we got into our AMD trade. We'll talk about what's going on with Johnson & Johnson, kind of see what direction the market is going after a little bit of a sell-off today. But after tomorrow, I will do a recording and a podcast every day until I'm home off vacation, but I will not do one live until I'm back from vacation. I'm going to be gone one full week. I'm getting on a plane late tomorrow, not coming back until late Wednesday night of the following week. Late Wednesday night, the following week, I will, like I said, I'll do something recorded each of those days. I don't know yet whether I'll do something first thing in the morning or whether I'll do it later in the day. I haven't decided for sure on that, but I'll put out a podcast. I'll stay on top of adjustments. I'll let you know if we're doing anything, but after tomorrow morning, I will not be live for a full week. And remember, I said I jumped the gun a little bit on switching back to doing live presentations in the morning. I maybe should have waited till after this vacation because I knew it was coming up, but that's okay. We'll work around that. It'll all be good. And with that, I am going to bid you adieu for the day. Thanks, everyone. I hope you had a great Monday. I hope you had a great weekend. Hope you had a great Monday. And like I said, live tomorrow, about 30 minutes after the market opens. Make sure you join us if at all possible. Thanks. Bye-bye.